Taiwan Semiconductor recently announced 10 billion plus investment in a new a fabrication plant for semiconductors. I believe it's in Texas. Intel's building something comparable in Oregon. Well, why all of a sudden are all the semiconductor people building huge plants in the United States, not in Taiwan or China for that matter? Well, the answer is we have a plan, the military has a plan called the broken nest theory. If China invades Taiwan, I don't know what the Seventh Fleet might do, but I do know that we will destroy Taiwan Semiconductor's facilities in Taiwan. Like if the Chinese take over, there'll be nothing left. That's why Taiwan's moving into the United States. So to your question, Adam, and to my point, the US will be the biggest beneficiary.
Jim Rickard, an economist and author, believes that the US economy is about to experience a boom due to the escalating tensions between China and Taiwan. Rickard argues that the U.S. is in a unique position to benefit from the situation, as it is the only country with the military and economic power to stand up to China. He believes that the conflict could lead to increased investment, trade with the U.S., and more American jobs. The tension over the invasion of Taiwan by China has escalated to a new level. It is not clear if this is just sabre-rattling or something more serious. Regardless, it means that Asia is now the center stage for global conflict and the U.S. economy stands to gain significantly from the fallout. With this escalation in tension, investors should now be thinking about how they can take advantage of this situation. In an earlier video, we discussed how the United States government is taking several approaches to pitching tech partners against China. In this video, we will go into detail on how the U.S. economy would experience a boom from the resulting China-Taiwan war escalation. Please watch, like, and share this video. Also, drop your comments and thoughts below, and remember to subscribe to the channel for more related content similar to this. Here's another short clip of Jim Rickard.
If you look 2, 3, 4, 5 years down the road, I'm very optimistic. I think the United States, of all countries, is in the best position to take advantage of this new supply chain world that I've described. Now, we're very capable of screwing up with bad public policy, and we're going through a really rough patch right now. I mean, Biden, I don't know what to say. I mean, he's not really in charge. The people who are don't understand the economy, don't understand what we're talking about. They live in an ideological bubble. This whole I call it the Green New scam. You know, the real science of climate change, there's no existential crisis. There's no imminent catastrophe. Sea levels are rising 7 inches every 100 years, which they have been for a long time, by the way, long before carbon emissions grew. That's not anything related to carbon, and it's not going to inundate the New York City subways ever. So, but that is driving policy. Germany just announced yesterday that they're reopening, I believe it's 5 or 7 coal burning plants. And by the way, they burn lignite, which is a really particularly dirty form of coal. Please don't tell Greta, I don't want to ruin her day. But the point being, they're turning on the uranium plants. They're opening new coal plants. Wind doesn't work, solar doesn't work. By the way, where I'm coming to you, everything you're looking at is solar powered off-grid. It's the largest non-commercial off-grid solar field in New England. But I didn't build it because of the Green New scam. I built it in case the power grid goes down. That's a separate issue. But the point being, with bad public policy, we can screw it up. But assuming that's not the case, the U.S. stands to benefit. I mean,
as tensions between China and Taiwan escalate, the U.S. economy is booming. American businesses are benefiting from the increased demand for their goods and services. The strong economy is helping to offset the political turmoil in Washington, and American consumers are confident and spending. The China-Taiwan conflict is just the latest example of the benefits of the American-led global order. Despite the challenges that come with it, this system has produced decades of peace and prosperity. American businesses and consumers are the biggest beneficiaries of this system, and they are helping to keep the economy strong even as geopolitical risks increase. But you may ask, why are China-Taiwan relations so tense? China-Taiwan relations are tense because the governments of both countries claim sovereignty over the other. China sees Taiwan as a breakaway province that must be reunified with the mainland, while Taiwan sees itself as a sovereign nation. This disagreement has led to a military standoff across the Taiwan Strait, and both sides have threatened to use force if the other side makes a move to unification. The economic ties between China and Taiwan are also a source of tension. Taiwan is heavily dependent on China for trade, and Beijing has used this leverage to try to force Taiwan to accept its terms for reunification. However, Taiwan has resisted these pressure tactics and sought to diversify its trade partners to reduce its dependence on China. The political situation in Taiwan is also a source of tension. The ruling party in Taiwan is the Kuomintang, KMT, which is pro-unification. The opposition party, the Democratic Progressive Party, DPP, is pro-independence. This division makes it difficult for the Taiwanese government to make any progress on the issue of unification, and it also increases the risk of conflict between the two sides. In addition, a number of other factors contribute to the tension between China and Taiwan, including the presence of U.S. troops in Taiwan, the sale of U.S. weapons to Taiwan, and the U.S.-China trade war. Listen to this carefully.
I'll say something that sounds obvious, but isn't. I mean, obviously, the way to do it is diversification. And everyone yawns, go, oh, yeah, diversification. We know that. Like, what? Yeah, what's the big deal about that? Well, the fact is people don't understand diversification. I run into people all the time. They say, well, I'm fully diversified. I've got 50 stocks in 10 different sectors, semiconductors, consumer non-durables, mining and minerals, et cetera. I say, you're not diversified. You may have 50 stocks, but you have one asset class. It's called stocks, and they're all going to go down together or up together, as the case may be. Real diversification, have a slice of stocks. I'm not anti-stocks. Have a significant slice of cash, which is a low return, but in deflation, it could be your best performing asset in real terms. But it also gives you huge optionality. When everything else collapses, you can be the one who goes shopping for the bargains. And by the way, Berkshire Hathaway, Warren Buffett have $130 billion in cash. They see what I see, and they're ready. So is the stock market's going to crash? I mean, just take everything we're saying. Recession, higher unemployment, lower margins, supply chain disruption, et cetera. Energy disruptions, shutting down. That's going to destroy corporate profits.
From speaking about the U.S. economic boom and China-Taiwan war escalation, Rickard went on to explain what diversification means for investors. Rickard believes that the word diversification is misunderstood by a lot of people. He cites that people who brag about having over 50 stocks in 10 different sectors aren't diversified. He believes that while these people may think they all have 50 stocks, they actually have one asset class that could possibly fall or rise together. Rickard believes real diversification is having a slice of stocks and a significant slice of cash. Listen to these carefully.
So that's in the cards. It doesn't mean the end of the world. It means you go shopping and pick up some bargains, but not yet. Slice of gold, I recommend 10%, not 50. People love to put words in your mouth. Jim Rickard says, sell everything and buy gold. I've never said that. I don't believe that. But I think a 10% slice is right. There's room, if you want to pick stocks, I like the oil majors. They're, forget Greta and forget Julian Tett, my friend of the Financial Times, who's a climate alarmist. Forget all that stuff. We're not getting away from oil and natural gas for decades, if not longer. Those stocks have been beaten down. BP, Chevron, ExxonMobil look really good. There's room for private equity, some, venture, tech startups, real estate, not commercial, but residential, farms. These are all, and that's a diversified portfolio. So if you've got gold over here, stocks over here, cash, real estate, private equity, natural resources in the middle, that's diversified. Yeah, you're right. I love 10-year treasury notes. And if they're a little too volatile for your taste, 2-year treasury notes will do just fine. But yeah, rates are going to come down. And when rates are this low, there's something called the DV01, dollar value of 1 basis point. In other words, for a given amount of rate reduction, the capital gain is greater when rates are lower. It's just bond math. So at these levels, you can see some very good capital gains.
While investing in different asset classes is one form of diversification, it is not the only form. True diversification involves investing in a variety of different asset classes, as well as different types of investments within those asset classes. For example, you might diversify within the asset class of stocks by investing in small cap, mid cap, and large cap stocks. This type of diversification helps to mitigate risk because if one type of stock goes down in value, the other types of stocks may offset those losses. Another way to diversify is by investing in growth and value stocks. Growth stocks are stocks that are expected to grow at a faster rate than the overall market, while value stocks are stocks that are trading at a discount to their intrinsic value. By investing in both growth and value stocks, you can again help to offset any losses in one type of stock with gains in the other type. The bottom line is that diversification is about more than just investing in different asset classes. It is about investing in a variety of different types of investments within those asset classes in order to mitigate risk. Thanks for watching. Anticipate our next video update.